What's up YouTube? What's up guys? This is your boy FS Culture and I'm back again on your screen with another video. So this video I'm going to show you or show you how I use my top-down analysis to analyze any market condition. So I will be taking the S&P 500 for instance. So I'm going to be analyze the market from the highest time frame to the lowest time frame, so that you can also take this strategy and analyze any market condition that you. So make sure you subscribe to the channel and hit on the notification bell so that anytime I upload a new video, you'll be the first person to be notified. Okay guys, so welcome back. So as I said earlier, we will be using the S&P 500 for this analysis, top-down analysis. So they can be used on any other instruments like the forex, the commodity, the stock. So the first thing that I do is to just go weekly time frame. Right, so on the weekly time frame, I don't do much over there. What I do is just watch the market and identify the trend. So on the hard time frame, you can see overall market movement, overall chart. Right, so it is clearly that we are in a bullish. So on the weekly, we just identify whether the market is the bullish, a bearish, or consolidating market. Right, so we can just see from the screen that we are in a bullish market trend. So after that, I will scale down to the daily time frame. I'll scale down to the daily time frame. Remember, this is a top-down analysis. So on the daily time frame, I don't also do much on the daily time frame. The only thing I do is to look out for some psychological areas. So we can see for ourselves that this area over here is our psychological area. Why? Because when we say psychological area or psychological zone, is where price has been tested several times, whether twice or maybe 3 times. Yeah, it makes that place a psychological place. So we can see from the screen that price tested this area over here. It reversed back, tested it again, but broke it. Yeah, right? It broke that area. After the breakout, it came back to test again, and price is moving upwards. So another place that we can find we can define as our psychological area is this place. So this place over here is also our psychological area. So after identifying our psychological areas, we will scale down to the 4-hour time frame. So this is the step-by-step movement, right? This is a step-by-step movement from the weekly time frame to the daily time frame. Then we are moving back to the 4-hour time frame. So on the 4-hour time frame, that's where we are going to do most of our analysis. And we can clearly see that we are in a bullish right now. Market is in a bullish trade right now. So what we will do on the 4-hour time frame is to just find our impulse movement and the correction movement. Because within those impulse and correction movement, that's where we are going to get an entry, right? So we can see from the screen that this is an impulse movement. Price make correction over here. Impulse, correction, impulse, correction, impulse, correction, impulse, correction, impulse, correction, impulse, correction. Right. This is also an impulse movement. Then we have change in trend. So let me show you something. In my previous video, I talk about trend breakouts, right? I talk about trend breakout. So this is a trend, right? And we can see that the trend has been what? Broken. And I told you that there's some condition that you have to what? Consider before you can, you can come to agreement that a trend has been what? Broken. The first thing is to what? Just make sure or to identify a double top or a double bottom or any other chart pattern like the head and shoulder pattern, right? So on this chart, we saw that this high was broken, right? This previous high was broken, and it made a low again. It made a low again over here, but this high couldn't break the previous high. That's one condition that you have to consider. This high over here couldn't break this previous high. So we have a high probability that this trend line will break, or we have a change in trend. So this is a chart pattern, a reversal chart pattern, and called head and shoulders. Head and shoulders. So this is our head, right? This is our shoulder and our shoulder. And here is our neckline. Here's our neckline. So you can clearly see that price broke, form a chart pattern called head and shoulder, then it broke our trend line. Then we had change in trend. So we are from bullish to bearish right now. So right now we are in a bearish trend. So you can see that price will be making a lower low, lower high, lower low, lower high, lower low, lower high, lower low, lower high, right? And so on. For you to get an entry, we have to look at the current market trend. So right now the current market trend is bearish, right? It's bearish. The current market trend is bearish. But we are moving or approaching a certain psychological level over here. I hope you remember this psychological level that's happening over here. So this is where we are approaching. So that means that we have the advantage to sell the market until it reaches this psychological level, right? So we are going to use this impulse movement, correction movement, to find an entry. So right now we are seeing that the current market price or the current market trend is in a bearish. So we are looking for sales. We are not looking for buys. We are looking for sell. Why? Because you can see from the chart that the bearish candlestick is very, very strong than the bullish candle. Right. So look at this candlestick. Very, very strong. The black candlestick is the bearish one. It's very, very, very strong than the bullish candle. So the bears are in control of this market. So looking at market structure, I made a video on the market structure, so I will be leaving the link somewhere on the screen. So looking at the market structure, you can see that price made an impulse movement and then it broke the previous lower low, right? Then it made a correction over here, right? So after the correction, what we are expecting is an impulse movement again. So after every correction, we have an impulse movement. So it made an impulse movement again and it broke the previous lower low. Then it makes a new low again, right? So we break the So this is our current situation. We are in what we call the correction situation. So this is an impulse movement. Remember, we want to sell the market until it reaches our psychological level. So over here we are looking for sales, right? We are looking for sales. So we will scale down to the 1 hour time. So on the 1 hour time frame, so I always trade with chart pattern because I'm a technical analyst, or I trade price action. So I always use what we call the chart patterns, the candlestick patterns, with the trend lines, psychological levels, zones, key levels to trade. So at this moment, when I step down to the 1 hour time frame, we can clearly see a chart pattern, right? I can clearly see a bearish symmetric triangle. So this is a bearish symmetric triangle, right? This is a bearish, chart pattern. So this is also a confluence, telling us that we are still on what, a bearish, right? This is also another confluence. So the first confluence is market is in what, a correction state. Whenever market is in a correction state, it doesn't move strongly. So whenever it changes from the correction state to the impulse movement, that's where we see what, a strong candlestick. So my anticipation is that when this trend, when market breaks this trend, we will experience what we call the impulse movement, right? We will experience what we call the impulse movement. So if you're a swing trader, you can just take this trade straight away. Yeah, when I'm swinging, I always take my entry on the on the 1 hour or the 4 hour time frame. So you take this trade, your first TP will be at this level. Your first TP will be at this level. And the second one, and if you want to take this trade for like 2 weeks or so, you can just push your last TP. Push your last TP at the psychological level, right? Or the psychological zone, right? Okay. So if you're a day trader and you don't want to hold your trade overnight, so you have to scale down to the 15-minute time frame. So scale it down to the 15-minute time frame. We can see a market in the bullish form, right? In the bullish form. So let me show you something over here. So when the market's in the bullish form like this, right? The market is in the bullish form. It always creates what? Impulse movement, correction movement. So for you to identify the trend line, the trend is over or something, there will be a change in character, or a change in trend. So over here we can see markets was what, making a high, low, higher high, higher low, higher high, higher low, until it decided to what, make a double bottom, a double top, right? Until market decided to break this this previous high, right? So this is another confluence, even telling us to sell this market, right? This is another confluence. So as a day trader, you can just place your trade over here, your stop loss over here, and your TP. The first TP here, this 1:1.3. Risk to reward, right? So your second TP, you can place it over here. This 1:2, right? Very, very good. Risk to reward mission. And then you can what do? This is the current market price. Alright guys, so this is how you can use this strategy to analyze any market, financial market instruments, right? Be it the S&P 500, gold, forex, euro, USD, gold, oil. You can use this strategy for analyzing this kind of market. So make sure you subscribe to the channel, hit on the notification bell so that anytime I upload a new video, you'll be the first person to be notified. And I will be leaving my Telegram channel link in the description. So you can join the channel and I post free trades over there every single day. And also, if you want to join FTA, if you want to join FTA is a Forex Trading Academy. If you want to join FTA and have one-on-one mentorship with me, I will leave my Instagram handle somewhere on the screen, so you can DM me and I will give you the details. So peace out.